The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruits Stock Club, man. Excellent. I hope everybody is having a great week so far, man. This week is, it's bittersweet. Last week was the last game in the playoffs for my son. I coach my son. If first time you've seen this, but I coach him. We did basketball this year for the first time I did, and man, we made it to the semifinals. One game, 2 points, 4 points actually, but we at the end of the game we had an opportunity to tie the game up, and we couldn't do it with 2 points. So that's the way it goes. So anyway, I wanted to have a few topics for you. Man, it's been a lot going on in the markets. If you're not in the stock market, shame on you. It's been a lot going on. What I'm going to discuss today, I'm going to go through charts. Man, I'm going to show you how to tell the future in the stock market. I'm going to tell you how to tell the future. Because if you were here last week, I told you what was going to happen. I told you that we were about to go to war. I'm going to show you how I knew that we were about to go to war, right? I don't know. You knew? Yes. I mean, I didn't know for sure, but using some analysis, which I'm going to show you, is how you can tell future events and position yourself, all right, in the market. The next thing we're also going to talk about is top performers up to March, up to yesterday. And we're also going to discuss the state of the economy, man, and the consumer. All right. So let's get into it. So today's show is war, oil, and your dividends. War, oil, and your dividends. All right. So please, I ask everyone to like, subscribe, and share. Please like, subscribe, and share. I'm trying to get my message out. Information. I know it's so much information online. Definitely, trying to get, have positive information that can take you and your family to the next level. Please get it out there. All right, so let me just go through the disclaimer real quick. The information provided in the First Fruit Stock Club podcast is for educational, informational purposes only and should not be considered financial, investment, tax, legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including potential loss of principal. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to the podcast, you acknowledge that you are responsible for your own investment decisions. All right. So look, let's get into the market. Man, yesterday was a crazy day. I mean, we started off with the news about us going to war, which I told you guys last week was about to happen. And I also gave you a playbook of what was about to happen. And hey, just like the playbook, things happen. And but the market's it cratered. Like the Dow was down 1,400 points at one point. 1,400 points, right? And man, it was a great opportunity to buy if you were able to buy stocks at that period of time. I had put a bunch of stocks in the club, a bunch of trades in the club, and which I which I figured that it would be opportunities. I didn't know it was going to be a 1,400 point opportunity, but I knew because of what was going on and how this has played out in the past that there were going to be some opportunities. And I took advantage of the opportunities. All right. So the Dow Jones Industrial Average today closed up 238 points. The S&P 500 up 52 points, and the Nasdaq up 290 points today. The Dow Jones Industrial Average. Now, going back last week, what I always do is I go from a week to week, and performance wise of how the market was doing. And if you went back through the week, and we saw March 3rd is when the market opened and the news really hit the market. It was down. Well, the market is, from week to week has been down like 1,000 points. The Dow Jones Industrial Average, but we hit a low of 47.15, right? 47.15. Compared to last week, the S&P 500 hit a low of 67.24, right? Compared to last week, and for the week, and the Nasdaq 22,208.39, right? And the Nasdaq really got hit. That's close to 600 points. So look, I want to give you guys some levels to look at, and I believe, and the futures are good tonight, but I believe that we're going to probably trade in this range of 22,208. Now I want you to look at that range, and I want you to mark that range down, because if we go lower than it, then that's when I always explain that, hey, the market is a discounting factor. It'll discount backwards. It goes lower than that, and it was like, well, we overvalued than buying, and the market would go down further. I don't think it will, but we may retest, and I'm gonna show you what happens if we're going to retest. So this level 23,152 in the Nasdaq, and we don't break that 23,000 mark, we're going to probably retest again, right? And we'll probably retest and go back. As you see, we closed at 22,807. So there's a range right there that I still think is an opportunity to buy in some positions. Now you can wait it out, but you don't know. It may break that, and the market just goes on a run, right? And then in the past, it has done that. After the initial news, the initial shock of the initial news of war, right? And then the market gets information, deciphers through all the information, and then makes a decision. Oh, the war may not last as long as they think. It may not be as complicated, and but we'll see. We don't know. But for right now, the market is shrugging it off right now. So, man, all the most important thing, right? And I'll go through my strategy that I have in my club is I teach everybody a 3-pronged strategy, right? A prong for dividends, a prong for long-term, account for long-term investing, and account for options, right? And what we want is these accounts produce 3 different opportunities for us, right? These accounts produce 3 different opportunities, right? The options is when the market has a sudden dramatic fall, like what happened on the 3rd, after the news hits the market about the war. And, then, options become a very a great opportunity, a great strategy to use options, because you've had a dramatic fall in the market. Now, what you don't know is if the market's going to keep on falling. And everybody said, well, let's trade the dip. Yeah, that's fine. That is a strategy until it keeps on dipping, right? But, what you can do is you can't be afraid. 1,400 point down does not happen every day, right? And we've had some duties, in regards to 1,000 points or more. But 1,400 points, the VIX, I think, went up almost close to 30. You take an opportunity to start buying. I bought in my long term. And what I like to do and build it out is, long term indexes and then options, right? But you do have to put in the options right away, because the stocks will move. There's still so many great opportunities and bargains out there in the market, but you do have to be careful. You do have to have to have a strategy, right? And you do have to know what you're doing. And so the strategy that I have, the first fruit strategy, which is the basis of the club, is that you're able to take advantage of all the opportunities that present to you, and you're not stuck in a box from one or the other. It allows you to take the formula and use it across all those strategies, the options, the long term, and the dividends. Right, the dividends can produce income for us even when the market is going down. Right, so this is a great opportunity. Right now is that we could take the advantage of the highs in the market, of the dips in the market, right? And as the market appreciates, which it will appreciate back to some of those different levels, um, is that once we get to those levels, then guess what you're able to do? You're able to take those gains that you get for putting in options and take those gains, some of those gains, and put them in a dividend account. And what you do over time, you create this snowball, right? And I teach how to go from $100 in passive income to 500, 500 to 1,000, 1,000 to 5,000, and 5,000 to 10,000. All right, that's what I teach. That's the goal of getting there to passive income. But you got to break it down, right? You got to be dedicated, and you have to pursue it, right? And you have to have a strategy. All right. So that's what I always teach and how we pursue that. So let's get back into the markets. So yeah, so that's that high. So if we 23,152, right, will be a determining factor of if this rally is for real or not. If it's another fake out, we want, we never want to be fully invested. We want to have cash on the side available for us to be able to take advantage of these opportunities. Options and dividends allow you to have cash on the side, you know, um, for when opportunities come like this. All right. So look, what I want to talk about today is how can you be a fortune teller in the stock market? How can you tell the future in the market? It's important that you know how to tell a future in the market. And this is how I was able to know that the stock market, that we were about to go into war. I mean, even though the president discussed it, but there was still no guarantee. But there were some things that were going on. If you knew what to look at, you could see that it was about to happen. And these are some of the things I discussed, and this is why I put the trades in the club that I did. All right, so look, so we have what's called, and this is I'm going to prove your financial vocabulary, right? And so your vocabulary is something called leading indicators, leading financial indicators, and lagging financial indicators. Leading and lagging financial indicators. What are they? All right, let's break this down. So leading indicators, these signal where the economy is likely going, right? So that's how I can say, look, because of these things, that are going on, I can look out into the economy, right? And I can look out to the future and say, hey, it's likely that the stock market may do this in the future. All right. So look, what are they? Stock market performance, all right? Building permits is a leading. ISM manufacturing index, right? Manufacturing is good. Moving on. Consumer sentiment, right? And yield curve, right? These indicators like headlights to your car. All right. So they can lead you to finding opportunities in the market. But what happens is, like for example, if you weren't ready for when the market when those opportunities in the market, you missed yesterday and you missed today. All right. And that's why you need somebody to help you out. Man, right? I.e. Stock Club. The second one is um ooh, I think I messed up, but lagging indicators, right? Um Lagging indicators consist of things that happen, but they usually take time for the market. It take time, and they don't lead you. They usually happen, and then after those things happen, then the market will perform. And those are lagging indicators. So one of the indicators that I wanted to discuss is oil, right? And oil became a leading indicator because it became an event based indicator, right? Because of what happened. So But if oil spikes due to oil supply shocks, it can signal, right? These are what we want to look at, right? Future inflation and potential economic slowdown. For example, conflict involving Iran, right? OPEC production supply disruptions, rising oil in these situations can be inflation. So that's another thing we want to work, we want to watch out for, right? So we want to hear these words. Remember, I always discuss the market has four ways it communicates, right? And when communication in a market can be positive or it can be negative, all right, positive or negative, right? So we have to look out for negative communication and and what's going on with the war. The negative communication could be price of oil is continuing to go up, which is likely. And what happens is that if the price of oil goes up, then it affects everything, right? So oil is in everything, it affects every aspect of our economy, right? So inflation, transportation costs, airline stocks, energy stocks, consumer spending, and Federal Reserve policy, right? Oil affects all those different things, right? So we have to be prepared, right? So so this is another thing. So remember I discussed that top portion of 23 uh 23 where were we? Let me go back here. So that top where we are 23 152. So I want you to watch out as we get closer to that number. I want you to watch the communication in the market, whether it's going to be positive or rather communication is negative. So if that communication continues to be positive, it may break through that point. But if it comes negative, oil is the cost of things are going up. This wars is not going to end as quickly as we thought. um, Casualties, the uh, the the path of Hormuz. I always mispronounce it. Excuse me. But the area where all the oil and all the oil tankers are, right? If we have problems in that area, and the problems persist, you will get a lot of negative news, and then we will that 2300 spot will get rejected. All right, and then we'll move back down. So we could be moving, up and down through those two points that I gave you in the market. So that those are some things you need to watch out for. All right. So we need to look at different things like I said, transportation costs, airline stocks, consumer spending, and Federal Reserve policy. We have to stay forward and look at those things. All right, so let's get into the next thing. Let's get into the top three gainers, right? The top three gainers. Days ending 3/3/26. Axion Enterprises up 30.9%. Netflix, right? Netflix is up. Netflix is one of the stocks I put some options on, right? Soon as I heard the news that they were going to um, they did not uh the win the bid for Paramount. Then I knew that the stock, because people were down on it. They really didn't want them Netflix to take on more debt, which is fine. But you don't know the future of it, and are they going to continue to generate the revenue? So that made the stock, and I still like Netflix. I think Netflix is $125 stock. That's where I see it going. I don't know when it will go there, but Netflix definitely has potential there, because basically what happens is that when news comes out and that investors are anticipating or hoping, and stocks springboard, they springboard to next, and that's what basically what Netflix did. And Block, right? Block, um, they they basically stated that they let off half of their employees. If you don't know that, employees are usually the largest expense for any company, labor, right? It's the largest expense. So when they stated that they're going to lay off 50% due to AI, so the market rewarded that. And unfortunately, we might see more of that going on, you know, with AI and companies looking at, lowering costs and continue to try to find revenue. But that's why, man, we have to be investors. We have to invest in the stock market. We have to have dividends and passive income for us because, if you're working and you have a job, you don't know what the future is going to be. But also, we need to just have extra revenue with the cost of everything going up, right? And the stock market gives us the perfect opportunity. Uh, Monday and Tuesday and today gave you great opportunities, right? Did you take advantage of them? Do you have a strategy to take advantage of them? You can only answer that question. All right, so let's go into the final section, man, of the title War, Oil, and Your Dividends. Man, this is a Barron's article. I thought it was a great article. And this is called, if you don't know, there's something called the Beige Book, right? Published 8 times a year. And what happens is basically the Federal Reserve goes through and does compiles information from businesses, from banks, from community groups in each region, right? There's Federal Reserve banks in different states, okay, and located in different regions. So here are the 5 revelations from this article from the latest report. All right. So this is interesting. So more households hit a wall. Spending power is split in many districts, with high income households still powering most of the growth. Luxury hotels in New York are charging record rates. Upscale restaurants of full Broadway ticket sales are running ahead of last year, but consumers are cutting back in many cases more than before. So lower and middle income consumers are increasingly opting for store label and value focused products rather than national brands. They are deferring auto repairs, preventative healthcare procedures. In Atlanta, contacts describe people selling clothes online, scrapping metal, and leaning on buy now and pay later just to cover basics. Nonprofit organizations access multiple districts, reporting surging demand for food and rental assistance. In Cleveland, contacts noted that they were seeing employed people asking for help covering groceries and utility bills. And I'm going to close the show on this. Is that, man, those of us who have not been affected, everyone's been affected. I don't care how much money you have, you still prices. No one wants prices to go up. No one wants less of whatever they have to go not as far, right? So in stating that, the way this economy is designed, right? It's designed for, of course, business owners, investors, right? And people who own real estate win in this economy. So you have to choose one of those. It's not, I just discussed how Block is laying off. I think, I don't know, the JP Morgan Chase also are laying off a lot of people. I discussed that about, what's going on. And we all have to be investors, right? Have to be investors. And know it's like, man, I don't really have a lot of money and I don't really do. It's all right. You just need to start, right? And if you are an investor, right, and you have a brokerage account and you're like, man, I have a brokerage account, but I haven't really done anything with it. I don't know what to do. Then you need a system. All right. You need a system that is going to put you in position to take advantage of opportunities in the market that just passed us, which is still an opportunity. There's still spots and still a lot of good companies out there down 10, 15, 20% that you should take advantage of, right? So, but you have to put yourself in position. You have to have a strategy. You have to start with a strong foundation. With the First Fruit Stock Club, I do one-on-ones with everybody, right? It's not just join a club, you don't talk to me. I do one-on-ones with everybody. Everybody gets a one-on-one. I have a course in the club about the strategy and how different aspects of the strategy. And we have a weekly call on Thursdays. All right. So you get all those different things. If you don't understand, I also help you set up your brokerage accounts, right? Understand how to specialize your brokerage account to optimize its performance. All right. So it's not just to have a brokerage account, but you're not really doing anything with it. Right, man. This is one of the best wealth tools, one of the easiest wealth tools that you can have. People that come to this country that are not from that, foreigners come here strictly for the fact of the opportunity that exists and the markets that exist here. The markets that exist here are the greatest in the world, the greatest economy in the world. And it's amazing that as we have the greatest economy in the world, only 10% of people, and let me say, in regards to brokerage accounts, only 40% of people have a brokerage account and invest in the stock market. Right? And a lot of it is knowledge based, and then a large percentage has small account value. So I'm here, of course, I come here every week and I pitch to you that, hey, join a club, or not my club, join somebody else's club and continue to move forward and take access to the tools that are out here, right? The strategies that are out here. Man, but I thank you guys so much. Once again, man, like, subscribe, share. Please tell everybody about the First Fruit Stock Club podcast and show. Man, we are here to help. And man, until next time, be fruitful.
The market is volatile, the stocks keep going down, then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything